What's going on, guys? Welcome back to another trade recap video. We're going to run you guys through all of our trades here today, which was quite a few trades, so it could take a second or two to do this, but ended up trading on the day pretty good. Netted $3,132 green after commission. It's probably going to be about $2,800 or so. But overall, really good day here, starting off the week on the right note, which is green. So we traded Boeing. I was red Boeing. We traded NEO. Ended up being green NEO. Traded MESO, was green on that. SIGL was dumb. APDN was good. HAPP was kind of dumb. OEG was good. So let's get into all these trades. But I was red on two of the tickers. And I didn't actually mean to trade GOVX. That was a fat finger. So we traded 8 tickers and was red on 2 out of the 8. So good consistency as well today. All right, let's get into what we're going to talk about. So we'll start here with Boeing. Boeing was a loss. We wanted to be short on Boeing. We were short on Boeing, and it might end up working out, but obviously timing and everything was wrong. So as many of you guys know, the plane crash thing with Boeing, we decided we kind of wanted to be short today. So we started entering short pre-market, entered a little bit more short here. It went all the way up to here. We entered more short here and then ended up covering the short on this top. So this was one where we were initially willing to hold this all day long to see if we would eventually fade down. And then I just decided to cut my loss at $405. Take the loss and just say, you know what, maybe this just isn't the right day. Maybe it's going to be tomorrow that we actually want to be more bearish on Boeing. So there's a couple things I have to walk you guys through on this for it to make sense. So just be patient. We'll go through the whole thing, and I'm sure you guys will be happy all said and done. So the most important thing about the Boeing trade is going to be located on the right screen. If you look at this right screen, you're going to see that there's this price level in here. Hold on, I'm zooming. You see this trend line? This trend line is at a price of 207.25. Earlier in the day, it was a little bit lower. So anyways, we got this level of 207. If you guys watched my pre-market video that we post almost every single day, we told you that around 206 to 207 is the selling location or short location on Boeing. We were it's not that we were antsy, but we started shorting pre-market, and then we shorted a little bit intraday when we kind of snapped down here earlier in the morning. So we kind of thought Boeing had the potential today with the news and the way it was set up on the longer term charts to just basically go into a sell-off today. But we were also understanding that it might not go into a sell-off immediately today, and it has the opportunity to actually bounce back up to 206, 207. So we were only short about 125 shares down in like the 202 pricing because we didn't want to have too big a size down there in case we did go to 206, 207. So we held the short from like 125 shares all the way back up to 206, 207 prices. Then we entered another couple hundred shares short to average up the move. But pretty much the goal of today was to be short bias Boeing, looking for it to fade out and break down, but also understanding that it could go up to 206 to 207, hesitate in that location, and then fall into a short move tomorrow. So we might not actually be wrong about Boeing. It might just be tomorrow or the next day that this happens. But right now, with the news on Boeing, we're a little bit more bearish on Boeing right now with the resistance of 207.50. So if we can't get over 207.50, we anticipate the price of Boeing is going to go lower, maybe closer to the 200s, and then even $100 and $190. So anyways, we were short Boeing, lost $400, shorted too soon, had a stop loss all the way up to the 207.50s area. And we just ended up taking off the trade eventually. So ended up losing $400 there. But we're still going to be watching Boeing bearish over the next couple days. NEO did a couple trades that we're not going to touch on too much. There are a couple like random pointless ones. So we'll just touch on the main one. So I was down $165 because I tried to do a short here on NEO earlier, which was long-term resistance. So I figured to do a little short there. It didn't work. Lost like $180. And then later in the day, we ended up buying a bounce on NEO from like here to here and like sold some here. So we just did basically a dip buy on NEO today to make a little bit of money. So anyways, we were short NEO pre-market on long-term resistance marks here. Didn't work. And then in our pre-market video, we told everyone to watch NEO short at the open and bearish at the open. It would most likely go through a dip to start the day before going bullish. That ended up happening perfectly. So we ended up just really trading a long play on NEO today on this bounce, and basically selling into the move up here to 65. So what were the reasons for going long? It was just on intraday support at the time. Had already sold off, went into its dip. Volume was going to the buy side. So we just went long, took a small long of a couple hundred shares, and made back the money that we'd originally lost on the day, which was like 180 bucks. All right, next trade on the day is, what is this? MESO. So MESO was one of my best traders on the day. This is something that I did. I traded MESO very well today. So I was extremely happy about that, pretty proud. So MESO, there were 3 trades for me. So the first trade on MESO was a short trade. I shorted the stock here, covered the move, and then I shorted the stock here on this top and covered the move like here or here. I don't remember. But anyways, I shorted here, covered here, shorted here, covered here, and then shorted here and covered that move. So the trades that I did, we'll just map them all off because there was 3 of them. So there was a trade short here in this top zone, covered down here, and then there was a short in this top zone, and then cover like somewhere in here. I can't remember exactly. And then there was another short, which was pretty much short this top zone, and then cover this bottom zone there. So those were all the trades, okay? So really the reason, and I only had 500 shares short today, so by the time I woke up, I saw MESO, I wanted to be bearish on the stock for the day. I bought shares of short. They had 500 shares available to short at the time, so I just bought what was available through my broker, which is Lightspeed, so I bought 500 shares to go short. The first trade here, at the time, let me just double check. So yeah, at the time, the first trade here was off of, I think, some resistance. So let me delete all these drawings, and then I can run you guys through this, step by step. So first trade was a short trade. Why did you go short, Connor? I'm pretty sure it was hitting resistance at 1640. Yeah, so I think the first trade had to do with the fact that on the intraday 1-minute chart, it was overbought, and on the long-term chart, which is screen on the right, you're going to see the price of 1642 highlighted by that red dashed line was our 1 deviation mark in the 4-hour chart. So I knew that we were running into resistance for the first time. We usually don't break out successfully the first time. So I knew to be a little bit more bearish since we were overbought on the intraday chart and we were running into long-term trending resistance for the first time of the day. So I bet bearish, covered into this first pullback. And then I said to myself, I would really, really like to be short. So this is really actually how it all played out. At the time, we were running up to this 1640 price. I'm like, I want to be bearish here, but I would also love to be bearish at 1950. So I'm like, what should I do? I'm like, I should trade bearish off of MESO, but not full size. So I had 500 shares short. I think I went short 200 or something like that on MESO here. Covered that move. The reason I went short 200 shares and not the total of 500 shares is because I knew we had a projected move as high as 1950 on the day. So I didn't want to short all 500 shares on this first pullback, be wrong, and then have it squeeze me all the way up to 1950 and then not be able to short any at the 1950 prices. So I went with the approach of shorting 200 shares, allowing myself another 300 shares to be available to short if in the event we went to 1950. Because if we're trading at the 1640 resistance, okay, and I use all my 500 shares, and then it does go to 1950, and then we reject there, I won't be able to average up the move, and it's going to make it more challenging to manage the position. So I decided to go short 200 shares on the first resistance mark, which usually isn't as strong a resistance as this mark at 1930s, 1950s. So went short 200 shares, covered into the pullback. We bounced up to the 1950 target, which was my final long target, but new short entry. So we went long all the way to the 1950s, which you can see is marked off by that green line on the right. So as we hit the 1950s, I took a full position of 500 shares short here, covered most into this drop, re-added. Oh yeah, I did re-add short on this top candle, and then covered majority into this first drop, and then I held like 50 shares and faded 50 shares throughout pre-market. So all of my big size was all in the top, and I ended up only fading like 40 shares. So I didn't fade a whole lot, but I did fade a little bit. And then my last trade here was intraday. We had already sold off on the day. We went through our bounce. So this was the first bounce on the day. So traders have successfully bounced the stock MESO. So they bounce it, run it all the way back up to the high a day mark. Well, the rules of the market basically state that there is no rule that it states this. I've just made this up, and so if you want to follow it, be my guest. If you don't want to follow it, be my guest. But that rule is that stocks do not break out of their high a day, or they do not break out of their most previous resistance on the first attempt. So stock made a high of 1340, crashes, market bounces, you go into the resistance for the first time, you're not meant to break out. So it goes above, right? Here's another thing, like, so stock does break out, right? It goes above, but does it sustain? No, it does not sustain. It comes back down, goes under. So my idea is that no matter what first attempt stock to break high a day, it will not successfully break out and sustain the breakout. So you might break out by a little bit, go over by 10, 20, 30 cents or whatever it might be, depending on the stock's range. And then it's going to fall back down. So as the stock MESO is running up into these prices, I start adding short, adding more short, and then basically look for this to break down and cover into that move. And then that's all I did on MESO, and I was able to net $1,618 on that stock today. Next one is SIGL, which we'll briefly talk about. It was really dumb. I mean, like, I'm not really mad that I did it. I'm kind of happy I did it, but then kind of mad that I didn't follow through with it. But let me explain. So SIGL, the stock is running up on today, and you guys know that it went from freaking $9 to $70. So I told everyone in our room that we are not going to trade this on the way up. We're gonna let everybody else trade the stock up. We can let them FOMO run it. We can let them do all the high risk trading, and we'll just wait for it to crash. And when it crashes, we'll buy the bounce, and then we'll sell the bounce up. That's what we'll do. And that's what we always do on these big high flyers that go crazy. We don't trade it up. You know, some people do, I'm sure, but I don't, and many of us don't. You know, sometimes we miss out, but that's fine. The risk becomes extremely elevated trading these up, and the risk is extremely lower just letting them crash and buying the bounce. So less profit potential on the bounce, but less risk. So it depends on what kind of game you want to play. If you're a risk-oriented trader, you do what we do, and that's buy the bounce. So we did buy the bounce, but as soon as I started buying this, and buying more of it, and the fills were so slow, even on light speed. I mean, like, this thing would not do shit. You couldn't do it. You couldn't do shit. Right? You couldn't. I was trying to buy market. I was trying to buy like 10 shares market order. No fill. Okay, 20 shares market order. No fill. Okay, I'll buy from the sellers. No fill. Okay, so it didn't really matter what I did. Whether I went market order, I jumped the bid, went to the ask, sold to the bid. It didn't matter what you did. The fills were so ridiculous that I was like, I don't even care. I'm just going to close this out at a $213 loss, so I don't have to deal with that. That was a headache. Just buying, all I bought was like 40 shares, and I lost a couple $100, and I couldn't even sell them, couldn't hardly buy them. So once I felt how hard it was to manage getting in and out of such a stock, I didn't even want to involve myself anymore. So I just decided, once we started to trade GL, whatever this is, or SIGL, it was nearly impossible to get a market order fill. It was nearly impossible to do any sort of trading on it. So at that point, I'm like, this makes no sense. It's too much of a headache. The hell with it. So I basically lost $200 on SIGL today because it was nearly impossible to get fills on to begin with. So then we just cut it off before it bounced. So we would have had a really green trade. We started buying the dip all down here, and we would have had a really green trade. But again, it was just so dumb to trade it after trading it that I was like, no, I'm good. So basically lost $200 because you couldn't really trade that stock efficiently. Next one on the list is APDN. So APDN was a short trade today, ended up making $324. So APDN, I went short here pre-market. It crashed all the way down to here. I covered it. That's it. So basically went short, crashed, covered. So this morning I wake up, I want to be short APDN. I look for shares of short. They only have 200 shares available to short, so I buy the 200 shares available to short, go short pre-market here. Stock gets hit with an offering, instantly crashes down to about $8, cover it, make $364. What was the reason for wanting to be short on APDN? If you look at APDN had already got to an overbought location on Friday. It crashed down after hours. Today we pushed up, we hit resistance, we're selling down. And if you looked at the news, everyone got geeked out about APDN on Friday, and they're just buying this thing up, which, by the way, I shorted that, and I think I made like 6,000 or 7,000 on Friday. Shorting that stock. But APDN squeezes up Friday on news of like their COVID-19 test, whatever. So everyone's buying this up on this COVID-19 test thing on Friday, and even in literally the headline, like it first started off by saying this COVID-19 test picks up the new COVID-19 variant. That's why everyone started buying it like crazy. And then shortly after, Benzinga comes out and says, no, it actually does not necessarily pick up the COVID-19 2 vaccine. So everyone's buying it long, thinking that it's picking up the new variant of COVID-19, and in reality, it's not. So then this morning, when it's still hanging up kind of high, it's like, why would I not be short on the stock that everyone accidentally bought because they thought it picked up the UK variant when it doesn't actually pick up the UK variant? So I decided to be short on this today because A, it was overbought, and everyone bought this stock for reasons that they really shouldn't have been buying it the other day. They thought it was good news, but really it was nothing news. It was, the company is still the exact same company as it was before at $6. So when it's trading up at $10, whatever, it's still the same exact thing as it was trading at $6. The news that pumped it up is not even like legit. So just went short 200 shares because that's all I could get this morning and made $324 on it. All right, next one is HAPP, which I kind of just am going to brush through quickly. There was a couple trades on it. It was a confusing one today. So HAPP, we did a little pre-market long all the way from like here to here. It didn't end up selling because we thought it could go a little bit higher. Generally, I would be short. So I went long here and then had shares of short. I wanted to be short. I would typically start shorting here, but then I thought I could go higher, so I held it short. So ended up taking a long, making a little bit of money. Really, I should have just been short because then I would have made a lot of money. So and that's the problem with trying to be long and then trying to be short. It's like, it's such a fine line between the psychology that sometimes it's just better to be on one side than the other or try to play both sides. So it's like, we were long making some money, but really we should have been shorting here. Didn't go short here, waited and then shorted 1,000 shares here. So shorted 1,000 shares on this candle, covered 1,000 shares on this drop, and then later in the day I started shorting this move and then got squeezed up a little bit and took it off and then it crashed. It was just a confusing one that most people won't be able to grasp. Like, most people would look at this going up and think this is going to go up and not turn into a drastic sell-off. Well, I was shorting here thinking it would turn into a drastic sell-off. I was a little bit too soon, and then it turned into a drastic sell-off. So all in all, this was just a confusing stock for the day, and I ended up making, I think, $4. I made $4. So I did a long, made some money, did a short, made some money, did a long, lost a little bit, then did a short, lost a little bit, and only made $4. It was pointless. All right. Next one on the list is OEG, which was another really good trade for me that even looking back now, we could have held a little longer. But nonetheless, it was a 5,000 share short here. Basically started shorting in the 488s to 491s, 5,000 shares, and then just covered the 5,000 shares on this first drop down to 450. Why did we cover the 5,000 shares on the drop to 450? Because when we were shorting at 490, our target was 450. So when we had shorted in the 490s with the target of 450, and then we hit the target of 450, we'd essentially completed our trading plan at that point. So the 5,000 share short from around the 490 zone down to 450 netted a win of 1,400. So didn't cover anything, stayed short 5,000 through all these candles back and forth till we hit the target of 450, covered the short, made $1,400. It ended up fading out more, but again, like I said, at the time, the 450 was the most profit potential that the market had offered. So at the time, the way that we were going about our trading from 490 to 450 was all the market was offering. So we weren't trying to take anything from the market that it wasn't already providing. Going for a move down here at the time would be asking more of the market than what it was currently providing, and we would have had to sit through choppy, kind of grindy trading to get that move. So I knew that at the time, this kind of 450 move was about as much as you could get in this sort of move without having to go through a bunch of consolidation. So just took it off on the first easy obtainable target move to make $1,400. All right, last one that we'll cover is SIFY, which was a short, which could have done better on, but overall was good. So I was going to go short 5,000 shares. I was only able to get filled 2,000 before the stock started to move. So essentially, we caught wind that the stock was going up. It's running up on the day with no news. If you look at the chart on the right, it's way overbought. So we just go short on this top 2,000 shares. Wanted to go 5,000, only got 2,000. Stock drops out, I cover a little bit, and then I hold 700 shares and fade like 700 shares down to here, and then I take it off. I didn't get the rest of this move, but at the time, essentially going from like 299 down to this price of like 256 was, again, all the market had offered at that point in time without having to go through a pop. So just covered that trade into the first easily obtainable target move that I could justify, netting a trade of $407. And that's how we get up to about $3,000 on the day. So I hope you guys liked the recap video. I know there was a lot of stocks there. I know there's a lot of things to cover, and sometimes I don't always go into extreme detail on some things, and that's just because there's a lot to cover. I don't want to make the video too long. But with that being said, appreciate you guys tuning in. Thanks for tuning in. I said that a million times. So anyways, I'm just going to go. Bye. Peace. Have a good day. Bye-bye. Oh, as soon as I stopped recording. There we go.